All righty, traders. This is Blake Morrow. We just had a little alarm go off on the dollar Canadian, and you got to watch this. I think that let's talk about the Canadian really quick, just since it's on my screen, and I want to we were discussing it during the FA.C.E webinar, but I think let me ask you this. One of the reasons why I love doing these webinars with you guys is I love to be able to teach, but in order for me to be able to teach, I need to make sure that you're understanding certain concepts. So I'm going to ask you this really quick, and then we'll come back to the dollar Canadian. So for those of you guys that are listening in right now, if you're looking at the dollar Canadian, what's the biggest, in my opinion, by looking at this chart right here, and I'll come back to it and answer and get your answers. Why do you think I'm focusing on the US dollar Canadian on the short side? What is the big standout tell right now that is suggesting that we move lower? What's the biggest tell here? Okay, look at the dollar Canadian 4-hour chart. Think about this for a moment, and then I'm going to go. I'll go focus on another chart really quick. We'll come back to the euro, or coming back to the dollar Canadian. So just think about that really quick. What is the biggest standout? All right, let's talk about the euro dollar. The euro holding up pretty well, and we're right off of these highs, guys. This is I'm going to show you something really quick. This support is holding. This to me looks like a bull flag. Right. And, this move here had a shallow 38% retracement. We're not even, I'm going to actually remove this. We don't really need that right now. We're right up at this resistance and a break above this resistance. And we should be, making our way up to 118.50, 119, right? So big resistance today is 118.10. It's huge. I'm going to keep us in range. Support intraday is going to be right here, 117.75. And remember, we're dealing with this is the UK's out today, right? So one of the things that we need to think about going into today. Right, not to get too terribly excited chasing the market one way or another. All right, so let's go to the sterling. So, you notice with the sterling, we are getting close to that big resistance we talked about all week last week, which is basically 137.90. That's the descending trend line. That's the 50% retracement. That's the previous support, current resistance. That is key. We get above that. 137.90. We get above that, and we're going to turn bullish. Because you get higher low, break above that. We're going to turn bullish till we get to about 140. So getting close. Support. These lows should offer support now. So 136.75. Okay. All right. I'm going to keep us in range. Aussie. You guys know I've kept it on bearish for weeks, but we are back above 73 cents. Can't be bearish anymore. I have to keep us at range. Sucks. It does, because I like having a bias. When I don't have a bias, it makes it a little bit more difficult. But at the same time, this Aussie is at risk of continuing higher here. We were talking in the chat room, and I'm going to reiterate something. I had been looking for a move towards 70 cents, 70.50, lower than where we went. Benedict in our chat room, he called it. He had a harmonic pattern completing this bear flag right pretty close to 71 cents. He got long and he's like, I think we're going to get back to 75 cents. I didn't agree with that until after last week, after the end of last week. But now, shit, with stocks higher, with the false breakdowns that we're seeing everywhere, false breakdowns, false breakouts, I think the risk is that the Aussie, does continue to press higher. And, without, now that we've got that confirmation from Powell that he's going to be continued being dovish, well then, why should we fight that? So previous resistance, that is current support. So that comes in at 72.80. Remember, 72.90 was big on the way up. 72.80 should be really good support intraday. Resistance is at 73.20. And we're not bearish anymore. I know it's a tight trading range, a tight range that we have there, but it doesn't really matter. Kiwi. Now, Kiwi, big resistance, held as support. I'm not going to say this because I don't want to badmouth. You guys know I don't like to badmouth people on like social media and stuff, but there's this one hedge fund manager guy on Twitter. He is consistently sending or tweeting out stuff. It's interesting because I know he actually manages a fund. He's consistently sending out or tweeting out stuff regarding New Zealand and their lockdowns and COVID cases. Do you know why he's doing that? Any ideas? Because he's bearish. Yeah, Gavin says because he's short. Right, he's short and he's got this thing going up in his face. He's like, what about the RBNZ? What about this? What about that? And I'm just like, oh man, he's short and he's getting his ass kicked right now. Yeah, Brand's like trying to make a move. I mean, it's just it's sad because I know based on I've been watching him for the last few weeks and his antics regarding the Kiwi, and I know he's short somewhere around here. And I'm watching it squeeze, and he's just, he's trying to reinforce his position and his ideas based on, tweets and news and blah, blah, blah. And I'm like, yeah, you're going to get caught. I mean, that's just it, right? So now you look at what the Kiwi's done, just like technically taking a step back. And I don't have any exposure in the New Zealand. I'm just talking out loud, right? Previous resistance held as support. I know the Kiwi got a drop down there because the RBNZ said, they weren't going to raise rates, but then they said, guess what? A rate hike's coming. That was a communication error. So then the Kiwi got a reversal. You know what? That has actually given us a false breakdown. This thing's bullish now. We're above the 50 DMA. I think we have to be bullish while we're above here. So let's go in a 4-hour chart. We had a head and shoulder pattern that didn't play out, right? We never broke the neckline, so we can remove that. That was a setup. So now you got this basically. I don't think if you're bullish, you don't want us below, definitely not below here. We don't want to see below here. So this would be 69.75. Let's just say roughly 69.75. And I think we have to be bullish. And next resistance 70.20. Now I'm going to go back to, because there was only about half of you here earlier. So I pulled up the dollar Canadian and I said, what keeps us bearish here in the dollar Canadian. It's continuing to break lower. But what is the biggest standout here in this chart that says you should be bearish? And it's not the rejection at 129.50 that we were talking about on the FA.C.E webinar. What's the biggest indication here on this chart that says we need to be short? I asked you guys that earlier, and I said, you guys tell me, because I want you guys to be able to identify this stuff. You know, and I've explained this over the years for those of you that have been listening to me for, 10 years or whatever. Look, at some point, I'm not going to be here. I won't be here anymore. I won't be teaching you guys. I'll be, I could, something bad could happen. I could, retire. I don't know. At some point, you're going to continue on without me, at some point. So I want you to have a lot of these takeaways where you go, okay, well, yeah, I remember Blake talking about that. And this is one of those. Like when you look at a dollar Canadian, when you look at this move, the standout here is that it's sub 38% retracement. It is a shallow retracement. That's the key to this. Look, this is and you guys hear Ellioticians call this all the time. They're like, it's an impulsive move, right? Well, all that basically is it's a very strong move, and you have to respect that it's really strong. And you hear me say it in different ways. That's a big black candle, and a big black candle usually yields other big black candles. You see a big red candle, and that's going to say, oh, you probably got more big red candles to go. So when you get an impulsive move like this, and you only get a retracement that's sub 38% retracement, that tells you it's a very shallow retracement. That means no one's buying that dip. That means that there's a good chance that we get a continuation lower. So that, to me, is the most bearish thing about this chart, is that, and yeah, we had a big rejection at key levels, but the fact that we couldn't bounce 38% retracement, that's at risk now of us breaking through this support. So, we break, and I told you guys that earlier, and now you can see we're actually breaking it. So, I guess the question is, let me delete this really quick. Let me remove that, because now you saw the 38% retracement. That means this resistance is now very critical for bears to hold. Bears do not want to see us get back above that. So that's 127.10. Now that we've broken that trend line, we have to turn bearish. So let's figure out where the next, it's like the last fib level supports are at here before this thing really gets hit. So the 78% retracement comes in at 125.30. It's next support. Okay. All right. And Michael says, plus the fact that oil is expected to keep pushing higher can support that thesis. Yeah, I mean, yeah. And look, I was really actually quite impressed with crude oil last week. So I tweeted out to that Bill Baruch. It's like, man, great call. I actually was not a believer. I did not believe crude oil would find buyers. I thought we'd at least get to the 200-day moving average, and I thought it'd actually just break. And he's like, yeah, anywhere below 25 or 65 bucks, you got to be a buyer. And I'm like, okay, if you say so. You trade crude, I don't. But this also illustrates how bad of a crude trader I am, because I am. And I'm self-described as probably one of the worst crude oil traders out there. I think if I had to take my, which is not very much trading, but all of my experiences with trading crude, I'm definitely not very good. So let's just put that out there. So whatever I say with crude, just go, yeah, Blake's not very good. Let's go the opposite direction. But anyway, no, jokes aside though, the thing is we found support down here, which is right, Michael. What happens if crude breaks back above 71 and we get back to the mid 70s, back to this resistance zone. I mean, what does that do to the Canadian? Pushes that dollar Canadian back to, you know, wherever, 120, 124, 123, who knows? Okay, let's go to, we got the Canadian. Dollar Swiss, guess what? 91. We found support there. How crazy is that? I mean, you know, we've been writing down 91 and 92 for like, I don't know, 3 weeks, maybe. How crazy. It's just like, oh yeah, we're at 91 cents. And then you can see that this is probably Swiss National Bank doing, but I mean, look at how much they're defending that 91 cent level. Super, super defensive of that level. So that is once again telling you, do not get short anywhere near there. I wouldn't want to be short Swissy anyway, because, you know, the Swiss National Bank is pretty good at shoving that trade right up your rear end, you know, when you're least expected. So US dollar, Norwegian krona, double top. You guys should have saw this on the week ahead video. Double top. Well, we're below 73, 873. You have to be bearish. Sorry. I played this on the long side. Did not work last week. I tried. I think my cost average was a 880. I think my cost average was like, I want to say 885 maybe. I got out like at 875 on this breakdown right here. So I took a little chunk out of the profits that I made in the dollar Canadian last week. It really, you know, like I said, between this trade not working out for me and the dollar Mexican peso taking my profits, the dollar Canadian got a lot of the profits zapped from this US dollar Norwegian krona. I actually spun my wheels last week, meaning I didn't make anything last week. And it was predominantly from losing money here, because that took and I stuck with it because as you guys know, I mean, I've been saying as long as we stay above 870, it's bullish. But you know, now that we're back below that double top, shoot, we should see next would be the 50% retracement right here at 862. So I actually have to put this on bearish while we're below this level. Sucks how we can flip from bullish to bearish just like that. And go back to Michael's comment here about crude. I mean, if crude continues higher, I mean, US dollar Norwegian krona should trade back down here. I will tell you this, because I guarantee you this. If I'm in front of my computer, I'm going to guarantee you this. I can't guarantee you much, you know, but I will guarantee you I will play the long side of the dollar Norway down here. I will get long down here. As long as I'm awake and I'm in front of my computer, I will play it long down here. Once we complete that double top, we get down to this support, a lot of horizontal support down here, I will get long, right? Okay, dollar mex. So dollar mex, this is another one that I want to play it on the long side anyway, anywhere below 20. I told the guys and gals in the chat room, I do want to be long down here. I don't know how far we're going to drop, but we are at the 50% retracement right now. I think while we're below this 2025, we've got to focus more on the downside, but I'm going to keep it in range. $618 comes in at 2008. So let's just imagine that being support. Okay. Dollar yen. I don't know what to do with this thing. I honestly just do not know. I'm just going to leave it alone. 2020 is still big resistance, actually 2025, but whatever. 110.25. That's key. We're going to keep it in range. Support's going to be this trend line, which comes in at 109.60. Okay, dollar index. Let's figure that one out. While we're below, well, you know what? Let's do this. You guys know, if you saw the week ahead video, I really think this is happening. You can, it's a 4 hour, I guess that's fine. I really think this is happening here. Basically, higher highs and higher lows, which means that I think we're getting down here. And once that we're going to be here for a non-farm payroll. Ugh. We're going to be here for non-farm payroll. We're going to be right around here. And I think that whether we continue higher or we break down completely, it has more to do with the jobs report. Wow, look at the NASDAQ just ripping. This is the NASDAQ 100. Oh my Lord. This is where people start pulling the plug, like, oh, that hurts. Yes, get me out of my short, right? Okay. So anyway, dollar index. Resistance today, 92.80. Support probably somewhere down here, which would be 92.50. So 92.50, 92.80. Nothing to really do here. I'm going to leave us in range. Let's go look at gold, silver, S&P. S&P, you guys know, it's bullish. Resistance, 45.50. Support right now, that's got to hold 44.70. So 4,400 is key. 44.70 and resistance being 45.50. And we are obviously bullish. Gold and silver is very simple. And so is probably Bitcoin too. Here's silver. 24 bucks. Let's see. We are not bearish anymore. Or above that 24. Next resistance will be right here is a 618. That comes in at 24.50, basically. So silver, 24.50, not bearish anymore. Support, I mean, 23.90. For today, that's going to matter. It's not a lot of liquidity today, not a lot of reason to move. So I was talking with Jim Welsh on Friday, and we were talking about gold. He is looking at this resistance right here, and I'm like, yeah, I'm really focused on the 618, which is 1825, and he's like, yeah, I'm looking at resistance at 1835. And he's like, a daily close above 1840 is bullish. I agree with that. I think we get above this 1835 and oh my Lord, NASDAQ. 1835. We could turn actually bullish above that. So it's range, support. Let's get rid of this right now. I mean, this trend line coming back, it'll be actually at 1800. So I'll write that down for today. And then Bitcoin, you guys know the numbers, right? 48.5. Oh no, I'm sorry. 55, which is the AB equals CD completion. 50,500. Duh. Whoops. And we are still bullish while we're above this level, really, which is at 42.50. 43.5, but really we're going to write down for today, we're going to write down 43.8 as we have been. So nothing's changed. 43,800. And there's your bias chart. It is finished, guys and gals. So like I said, it is, well, first of all, let's just remember today is a holiday in the UK. So it's going to be pretty quiet today. We're missing, I think Amanda's out probably enjoying the holiday. Nice long weekend. I know we're missing a lot of people from UK. It's going to be kind of light. So just be careful out there. And really this week's kind of even though we have non-farm payroll, it's a light week because a lot of US traders are going to be gone. They're enjoying their last week of summer because we have Labor Day weekend this next weekend coming up, and we will be off on Monday. So just remember that. All right. Steve, Stelios, welcome back, gents.
Hello.
Thank you.
How you guys doing?
Very well, very well.
Don't BS me. It sucks.
I was better. Where I was.
Don't bull crap us. We all know. I mean, you guys are not on the beach. It sucks.
Yep.
Admit it.
I do.
Yeah. It's got to be nice. I can honestly say, me personally, I was looking at the pictures of both of you guys and I was truly jealous.
Hating
like
you.
usually I'm like, oh, I hope you guys have fun. No, I was really jealous the last 2 weeks. Like really was. Genuinely speaking.
Oh, it was very good. Very good.
I bet.
I will admit to that, mate.
Well, it looks awesome.
Yes.
It looks like you guys had fun, and welcome back. Time to get back to the real world. We got a lot of work to do.
We do.
Yeah, we got a ton of work to do coming up, and I'm glad to have you guys back because it's been kind of lonely without you. So I'm going to let you guys take over so you guys can look at the charts and say your piece. I'm going to go get my kids some breakfast. So I'll see you guys.
Thank you, mate. Enjoy.
Yeah, thank you. I'll see you guys in the chat room.
Thank you, Blake. Thank you.
Bye-bye, mate.
Bye-bye.
So I've been away
So,
for a
Stel.
week and I haven't really been looking much at markets on purpose. And I come back and nothing's really
haven't lost
changed.
much.
Yeah, I was hoping secretly that Powell might have given us something pretty spectacular, and yields would have been rising, equities or risk would have been dropping, but nope.
In the next lifetime, perhaps.
Yeah, we'll see. But bottom line is the central banks, they really they want to show that they their goal is to normalize rates and hike and do this and that, but they know they can't. so
that's why they keep bluffing that they can.
Yeah.
Because if they admit that they can't, it's the beginning of the end. That's it.
Yeah, it's a problem. But anyway, the bottom line is that we didn't get this something that would have shocked or moved the markets a bit. So we're still in a low yields situation. Yes, there will be some tapering. Let's see, and let's wait and see the pace and the composition and all that. And the equity markets just can't dip at all. So, what do? Do you short them? Hell no. Do you buy them?
No.
Do you buy them? It's if you put a gun to my head, I'll buy them. But I find it very, very difficult from a macro perspective to actually go in and buy such valuations. So I'm not touching them.
Same here.
Yeah, exactly. Currencies, the dollar did try to rally over the past couple of weeks. Powell put a stop to that. Very difficult to say. I still think the path of least resistance for the dollar is to go higher. But when you have a situation like this where there's no, at least not yet, big macro reason to be buying the dollar, I find myself very hesitant, and I have a lack of conviction for a lot of things. So unfortunately, in these conditions, I tend to trade very little. So,
lack of conviction is a very normal thing under current market conditions, right?
Yeah.
And these are the type of market conditions they want to have and they want to create, right? This complete lack of volatility and utter complacency, about any underlying risk. Don't worry, we have your back no matter what happens, blah 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 blah. We're gonna do whatever it takes, and just keep buying the dip. Everything's gonna be all right forever.
Yeah. Well, at the moment, this is the status quo, and
it is.
There's no, there's no reason why anybody should go against it. Timing. This,
so far it works.
Timing this is very, very difficult. So if you feel lucky, do it, but I don't.
Do you feel lucky, punk?
Do you feel lucky, punk? Huh? In other news, metals obviously rallied on Friday, but they're they're trying to recoup, especially silver, that 24 level. Trying to recoup that.
Gold might have broken out on Friday. Silver, not yet. It's getting close, but not yet. So it seems to me that metals might get going. That's how it looks to me. And at the same time, if you notice, commodity currencies, here's the Aussie, right? Here's the Kiwi, had a very nice reversal after this lower low. We had this divergence happening here. I don't know. They look to me like they're about to start moving to the upside once again. Yes, I know evidence are not solid and concrete yet, but that's how it starts looking. So I'm seriously in the lookout for opportunities. I already did, as I had said I would do. I already did short 1/3 of a position USD NOK. So I'm already 1/3 short. If I remember right, my entry point is 876 and some change. We've now broken through the ascending channel. And today, if this gets confirmed by the end of the day, we're also about to trigger this double top up there, right? Nice rectangle, double top, gets triggered on a daily close. I'm going to be conservative again and say on a daily close below 870 with a downside target of 830. So the implied target for this double top is at 830. So I've already dipped my toe in the water by starting with USD NOK, my favorite for obvious reasons. Yeah. And I'm the lookout to both increase exposure in the case of the USD NOK and be short other currencies and assets against the dollar. I'm starting slowly. And as my confidence develops based on the price action, I'm going to be more than willing to do so across many asset classes, as I said. So yeah, that's what I'm looking at the moment. And yeah, given I know the market still goes from one announcement to the next, from one event risk to the next. We had the Fed, the Jackson Hole, which is in essence the Fed, because everybody cared about one thing, what Powell is going to say, right? So in essence, what the Fed is going to signal. That's it. I don't care if it was in the, during the online Jackson Hole symposium kind of thing, or if it was
exactly.
If it was on a boat during vacations. It's one and the same. Whatever Powell says, whenever Powell speaks, everything is well thought of, planned in advance, checked, rechecked, groomed. So we know that whatever he said is not a coincidence. It's not like, I'm going to speak to these guys and, be myself and, be relaxed and answer some questions. No, in this case, just give a statement. Everything he said had a purpose. Every single word was vetted to be what it was supposed to be. So we got a very, very dovish signal. And, given that, I absolutely see, and given also the fact that risk assets seem to just, be on the continuous move higher, I don't see any reason why I would want to be long the dollar. In essence, I don't even see a reason why I shouldn't be short the dollar, right? We've had this rebound in the dollar, in the dollar index, for example, if I pull it up. And there is a chance this was it, right? I mean, I was looking for this rebound to be corrective in nature. Perhaps that was it. I wouldn't be that surprised, right? I'm not saying it's impossible. As I said, the evidence is still not, rock solid, right? But especially given the nod from Powell, I want to start getting some exposure again, and it's definitely going to be short the dollar. Now, as Stelios said, you could also be long risk assets, but in all honesty, I don't have the guts to chase anything after such a move. Although I've said it a long time ago, and I still believe it's very likely that this is going to end up producing a parabolic, unsustainable kind of move higher. And I do see the pieces of the puzzle coming into place one by one and aligning for this scenario to be a probable scenario. The market just going vertical at the end and perhaps like producing something like a 20%, 10-20% move higher within just a few days with zero pullbacks or whatever. And yeah, after that I would expect a crash. And by a crash, I don't mean anything like super dramatic, like a 50-60% move, but I would expect like a 20% move lower or whatever. But currently, I don't see any technical justification or fundamental justification, given the fact that the market is still drinking the Kool-Aid and sees that central banks will do everything to sustain this mirage, this illusion. They've now made, theoretically speaking, the real economy just being the stock market. So as long as that's the case, I don't see any reason why you would want to be short this. At some point, this whole thing is going to collapse, and it's going to be extremely painful, and it's going to be the next financial crisis or market crash that nobody could see coming. As always, nobody ever can see these things coming. But we're not here to speculate what's going to happen like 6 months, 3 months, 9 months, 12 months from now. We're just here to trade somewhat shorter term. So we have this ascending wedge here in the S&P. As you see, every single pullback has been super minor. I mean, this is just amazing. Let's go back, almost a year. Let's go back to the beginning of November. Okay. So let's go back like 9 months, right? Within these 9 months, look at the type of pullbacks we had. 5%.
None, basically.
6%. 3.5%. Almost 5%. You get it. And if you notice, it's not just that, because somebody would say, 5-6%, not that bad. But it's also the way they develop, right? Most of them start promising, like you get like 2-3, very decent negative days, and that's it. There's no follow through, right? You get like, look here, 3, very decent down days. You start thinking, this finally might be, the beginning of a bigger correction. That's it. The market just forgot about it. Then you get like 2 rather negative down days within 3 days. That's it. The market forgot about it. Then you get like 3 negative down days. First one being a small one, second one being somewhat better, the third one accelerating. You start thinking, oh, finally, you know, this is going to be it. That's it. And then the last one, two down days. That's it. Market forgot about it. You know, moves on. Yeah. So you know, very hard market.
It's depressing to just listen to you say that.
Yeah. Look at the Nasdaq. I mean, yeah, it's unbelievable. I mean, same deal here. We now recently broke through this little rectangle. We back tested it. We're on our way higher. We have the next upside objective at 15,600. I mean, this thing is unstoppable. We're even attempting to break through this descending trend line resistance in the RSI, which shows that we might actually gain some momentum here instead of continuing this divergence. Really, just there's no reason to try to fade this. Look at the DAX. DAX within this ascending wedge, but as I've said before, in this case, the inclination of the wedge not being steep but being rather shallow, that's a big probability of this ending up producing a bullish breakout and then accelerating higher. So there is really none of the big indices I would be shorting at least in the short term, right? At some point, I think they're going to produce massive moves to the downside, but we're not there yet. And I think it would be ill-advised if you're trying to play this game again and again and again. I mean, every time take small stabs being short of the market against the highs when you have a couple of down days. It would more end up being something like death by 1,000 cuts. So yeah, a very hard market to trade, because if you have a little bit of brain in your head, you can't be long, but on the same time, it's super dangerous being short, right? So it is what it is. I know it's not nice, it's nasty, but it is what it is. Now, crude oil has had this very nice rebound higher, which makes it rather probable that we've seen the end of this corrective move lower as well. Although if you want confirmation, we have this nice confluence of the 50 DMA and most importantly, of course, this descending channel trend line resistance currently passing from roughly, let's say, $71.5. Above that, I think we're on our way to new highs and most likely to see levels above 80, right? A rejection from anywhere here just keeps us in some kind of a more prolonged corrective move after this massive move higher, which increased value of crude by 7-fold, literally, exactly, if we're talking about the continuous contract. So yeah, not impossible. Now, having to do with natural gas, we've had a very nice rebound higher from 380. If you remember, I kept saying again and again how 380 is the first area of support, and there is absolutely no reason why you should be short natural gas against it. And 380 did hold and produced this another massive leg higher, which almost tagged the last objective of this symmetrical triangle, which was the 100% extension of the triangle's maximum range, right? That was at 458. We made it to 451, right? And we're seeing some nice type of reversal. We drew this possible outcome a long time ago, and so far it has played out, really beautifully. Suffice it to say, from what you see on this chart as well, which I have nothing to change on, the plotting we did, I wouldn't be chasing natural gas up here, right? I still believe it's very bullish. I still believe it's going to be going higher. Would I be chasing it up here? Absolutely not. Okay. And today's candlestick, be it a Monday as well, of course, it's too early on the day. Let's give it a few hours and let it settle. Might prove to be a very nice reversal candlestick, right? We got new highs, And we are toying with the idea of producing a lower low. So in essence, an outside reversal day might be in the making here, right? Which, if that's the case, could be a very, very nice indication that we're about to see a deeper corrective move lower, because so far, every pullback we've seen for quite some time has been, shallow and, short-lived, right? Michael is asking, wondering your thoughts regarding whether you believe US economy can produce over 500K jobs month over month for the next 6 to 12 months to meet expectations and Fed's mandate. Seems a big task. Listen, first of all, I don't think there is any Fed mandate. Right. The Fed, you know what the Fed's mandate is? A moving goalpost. That's what the Fed's mandate is. Because the Fed cannot admit what its real mandate is. So they keep referring to their fake mandates. And why do I call them fake mandates? Because once inflation started being a permanent issue, they kept changing the goalpost again and again. The mandate for inflation used to be price stability, right? For everybody that understands basic maths, what is price stability, Stelios? Unless
I'm sorry. I was away for a second. What did you ask?
Yeah, I said mathematically. What does price stability mean?
Mathematically, price stability is something that doesn't move.
Exactly.
Something that doesn't go up 2% a year.
Exactly. So, let's take the two mandates, right? Inflation mandate was price stability. Then it became between 0 and 2%, right? Inflation that does not exceed 2%. That was the wording. It then became close to 2%. It then became symmetrical 2%. It then became 2% became a target, not a ceiling. And then it became symmetrical 2% in the extent that inflation currently in the US is running at 6%, and everybody seems to think it's normal, right? They pretend that it's absolutely normal and there's nothing to worry about, right? Then let's take the employment mandate. I'm old enough to remember, and I've been in the markets for enough years to remember when post the financial crisis of 2007, 2008, 5% unemployment was considered the ultimate target for employment for the Fed. That was like the ideal target. And then we reached 5%, we kept moving lower, and they weren't happy with employment. Parenthesis here, right? I agree with them. On this aspect, I agree with them, because employment numbers, as long as CPI numbers, are extremely rigged, right? I've explained in the past, in one of the webinars we had a long time ago, how employment measurement has changed, and they have removed several aspects of unemployment from the reported employment, the headline number. The headline number is called the U3, right? There are several types of measures of employment, right? So they've removed several types of unemployment from U3, the one that's being reported, and they've kept many of them in one unemployment number that few people look at. It's called the U6, right? U6. Which states the real unemployment much better. And the fun part is, I used to say that years ago, because it's not like a conspiracy theory. You can do your research and you can find all that out by yourself. It's not like secret data. And of course, the Fed didn't care about it because it was convenient for unemployment to look lower than it is. Now that unemployment has been below 5% for rather very long periods of time recently, I know we had the big spike higher, with COVID, but trust me, it's gonna, if we don't get a financial crisis soon enough, it's gonna drop below once again. Now it was convenient for them to start admitting that Powell has said it many times, that employment numbers are not so depictive of the reality in the labor market. You know, they put it mildly. You know what I mean? They don't want to say our numbers are BS, because when it was convenient to show lower employment, we threw a lot of unemployment type of people to the U6, so it's not in the headline number. They can't say that, so they put it somewhat politely and mildly, right? So I agree with them on the unemployment thing, but have no doubt, even if the US reaches back towards 3% unemployment, they're just going to move the goalposts there as well. So do I believe, going back to your question, that the US can create this type of numbers? The answer is it depends. It depends on how much stimulus they're willing to keep throwing in the economy. Do I believe that this type of job growth is sustainable if the economy is left on its own strengths? No, I don't. Do I believe, though, that it's very likely that, for one reason or the other, they're going to keep voting for different type of fiscal measures to stimulate the economy and create this type of jobs? Yeah, I think it's very likely. So do I believe this is a possible outcome? Yes, I do believe this is a possible outcome. Not an easy one, but I do believe it's a possible one. Okay, what else did I have to talk about today? Cryptocurrencies are somewhat negative on the day, but nothing magnificent here. As I've said though, last week as well, the risk reward is not in favor of chasing them up here. Right? Look at Bitcoin. I think we might see a pullback towards 42.5. Look at Ethereum. I think we might get a pullback at least towards like 2900. So keep that in mind. Other than that, I don't think anything super exciting is happening here for the moment. And given the outlook for the rest of the asset classes, I don't see this environment being really negative for cryptocurrencies. So it is what it is. What else? What else? Yes, something else. Palladium. Palladium is the one I wanted to talk about. So we were monitoring this descending channel in Palladium here. I had mentioned the importance of 2500 in this rebound. We did get rejected initially from retesting it, from back testing it, sorry, and we're now about to retest it, right? So I have my eyes on 2500. We break through 2500. We open the door for more upside within this, and there would also be a chance in this scenario that we've found a low here as well, and Palladium might be on its way to new highs. So keep that in mind. Nothing has changed really with platinum. So anyhow, that's more or less what I wanted to talk about. So as you understand, I'm in the lookout for more dollar weakness. I see very likely that we're going to get more risk asset strength, and that benefits the vast majority of the rest of the asset classes that are denominated in dollars. And now let me go through some of your questions. So let's see. KRE. This one is a pain. This one is really a pain. Still within some kind of a prolonged consolidation. Notice how the 200 daily moving average is supporting for the time being. So really being bearish against the 200 DMA is not something I would suggest, but from what I'm seeing here, perhaps the type of corrective move we have in hand is something like this. That's a problem with corrective moves. The more they unfold, the more you need to so something like this. yeah, I wouldn't be turning bullish yet, but on the other hand, you know, you need to acknowledge the bigger picture here, right? Bigger picture, I think that this is probably some kind of a corrective consolidation. We're correcting more in time than in price. And I think that we're eventually going to be breaking higher, but we're not ready to do that yet. SMH and then Tesla. SMH seems to be, you know, very well bid. Momentum is, you know, not amazing in any way. I can tell you that much, but it still keeps pushing higher and higher and higher, with the next upside objective being at 284, right? So yeah, I don't see anything really bearish here. So, you know, keep looking higher against the previous low at 250. You know, you can keep aiming higher. RSI seems to be pushing towards overbought conditions, which is also going to be a nice bullish signal as well. And Tesla still nicely holding within this ascending channel. Listen, look at the RSI. Look at this is a temporary trend line, right? We'll probably need to readjust again. Look at the recent price action. I still think we are in some kind of a prolonged correction here, right? As long as momentum is what it currently is, I don't think we're done, right? I don't think we're done. So I wouldn't be long this. I'm completely omitting all the fundamentalisms now. My comment was purely technical, so don't think it's biased. From what I've said multiple times in the past, that in my opinion, Tesla is never, ever, ever going to justify these valuations, ever. It's mathematically impossible. So at some point, I think Tesla is going to suffer a major crash. But my comment here was purely technical, completely irrelevant of what Tesla is, what it does, you know, if the valuations are logical or not. So I would be looking for, you know, this corrective move to continue for some time before we finally see something happening. So bottom line, I would stay sidelined at the moment. Now, if you're long for some reason, yeah, you can still keep being long, I guess. I don't see anything really bearish. I don't see anything really bullish in the short term, but, you know, given the prior trend higher, you know, this type of consolidation is very likely to be resolved to the upside, right? I have no problem saying that, irrespective of, you know, my fundamental thesis about it. Netflix should soon fly with the next round of lockdowns. I'm half joking, by the way, not really joking, but half joking. I'm afraid, you know, we might get something stupid like that happening. And to be frank with you, it looks to me that we might be getting closer to a breakout here in Netflix, right? Clearly corrective consolidation. I mean, you can see, right, the difference. Look at the type of moves we get to the upside, right? And look at the corrective moves. Symmetrical triangle here, symmetrical triangle there. You know, they share the same fate. So I have to tell you that I wouldn't be short this in any way, type of or form, right? I think it's, we might be about to break out here. So yeah, you're either long here or in the sidelines. You know, don't try to fade this. In my opinion, it's very, very dangerous. Still long, yes. Thank you, Steve. Okay, good, Alexander. PLTR, is that Peloton? Let me see. No, Palantir, sorry, it's Palantir. Yeah, this one seems to have broken out, right? I remain somewhat skeptical for two reasons. One of them is the RSI being very unimpressive, right? And the second one is because the trend line resistance is very arbitrary, as you can see, right? I could pass it from any second place I want. I could say it broke out there. I could say it broke out recently, might have not broken out yet. Confirmation for me would be seeing some healthy momentum in this move higher, which isn't there for the time being. So yeah, if I had to be something here, short or long, I would be long, but very cautiously, right? Very cautiously. Clearly resistance remains 2770 because it's the previous high and the 38.2 from this peak high to this low that we found in May, right? So yeah, I would remain skeptical about it. And last but not least, Aussie Kiwi. Listen, Aussie Kiwi remains under pressure. There it is. Now, two things about Aussie Kiwi. First of all, the big picture. Big picture, we remain within this big descending channel you can see here in purple, right? So that's to have the big picture in mind. Now, shorter term picture, I'm monitoring this descending channel here in red. We keep toying around with its support, but we haven't broken down from it. Now, from a risk reward perspective, I would understand why somebody would want to attempt being long here, right? But keep in mind, bigger picture, we're in the middle of the bigger channel. So, medium to long term trend, non-existent here. Shorter term trend, definitely bearish. But as I said, look at this. We are toying around with the previous low that we had over there at the beginning of December. So we're talking now about what is it, like 8-9 month low. So, and at the same time, this descending channel trend line support. So I wouldn't be chasing this down here to be short, I mean, right? But as you understand, my approach is that I would not even consider trading this as we speak. Right? I'm giving you perspective, for the short term, for the medium term, since you asked for it. But for me, I opened this chart and I clearly know that there is one thing I should do here: stay away from it and do something else. XLV. Is this the one? Amira, is this the one you're looking for? SPDR, Select Sector Fund, Healthcare. Okay, yes. What can I say about this, mate? Super bullish, right? You can see that. And I think it might have more to go. And it might even do it fast. But pay attention to this. What I'm trying to say here is that, in my opinion, this type of appreciation we're seeing here is unsustainable in the medium to long term, right? So you can keep being long because these type of parabolic moves can go super parabolic near the end. But once we see some kind of a big crack happening to this, keep in mind that everybody's going to be running for the exit at the same time, right? Because a lot of people will have been riding this, will have made shitloads of profits, excuse my language. And once they see this really crack, they're going to be like, okay, that's enough for me. I'm super satisfied with what I've made here. Time for me to cash out. And then that's what happens to parabolic moves. And then you're going to get a vertical move to the downside, right? So keep that in mind. Now, what can I tell you here? Can I give you upside targets? Absolutely not. There is not even a single corrective move that's close enough to produce fib extensions, right? So the only thing I can do here is look at this, admire it, and tell you what, historically speaking, happens in this type of situations, right? It can go more vertical, but it's gonna this is gonna definitely go bust at some point. Here is TLT. We've seen it before. Several Rsi divergences. What's this big trend line resistance, the blue one? But if you focus and notice shorter term, this looks more of a symmetrical triangle, which, to be frank, usually doesn't have bearish implications, right? Now, fundamentally speaking, it's not easy for me to see the upside case scenario for TLT. But I've seen weirder thing happens in manipulated markets like the bond market, right? The treasury market. So who knows? The technical picture might be telling the truth here. It's very, very likely. Watch the triangles, trend line resistance and support to indicate where the next move is going to be towards, right? Is team a ticker name? No, it isn't. Oh, it might be because it's switched to Forex. Wait, is this the one? Is this the one? Okay, yes. Okay. What the? Yeah. Yeah. You remember my comments about XLV? Yeah, one and the same here. Just notice the huge Rsi divergence, right? If you're long, you know, well done, bro. Good for you. But this thing is going to go bust sooner rather than later, irrespective of what the other markets are doing, right? Yeah. Yeah, I wouldn't be chasing this up here, you know, even if they paid me to do so. Unless they guaranteed possible losses, I wouldn't be chasing this up here. Super bullish, but you know, super bullish, but as bullish as it can be. Look at the 50 DMA having literally turned vertical. Look at the 200 DMA about to go vertical as well. This is unsustainable. So, you know, if you're long, good. Keep your position, keep trailing your stop loss. But once you see this crack, don't be there anymore. Just literally don't be there anymore. I believe that this gap post earnings at 270 is going to be filled before you can say your name twice. Okay, guys and girls, I hope I satisfied your financial market curiosity, and I'll see you again tomorrow. Have a wonderful rest of the day.
Thank you, everybody.
Bye-bye. Bye, Stel.